No matter what the market is doing, green or red, there are always ways to make money, whether it be capital gains, longing and shorting, or generating passive income from liquidity providing, and that's what we're going to go over today. So in this video, I'm going to show you a few of my GMX yield farming strategies, GMX V2 to be specific. I'm going to break down why this makes sense right now in this current environment with this recent, bullish push that we've been seeing. And then at the end, I'm going to give you my crypto market update. Well, overall, just market update, including stocks, and just give you guys my thoughts on where I see the market going in the near future. Are we in a bull market? Are we in a bear market? Like, what's going on? Stay tuned. And before we get started, I do have to say this video should not be taken as financial advice. Please consult with your financial advisor before making any investment decisions. This video is for your education purposes only. So without further ado, let's get into these yields. All right, so here we are on GMX's website. If you guys don't know, GMX is a decentralized perpetual exchange. And as you can see here, it says trade Bitcoin, ETH, Avalanche, and other top cryptocurrencies with up to 50x leverage directly from your wallet. That means you don't have to use any kind of centralized exchange. And as you can see right here, GMX is like a darling of DeFi. Trading volume is 156 million. They have a pretty high TVL. And, they've been pretty battle tested. It was one of the few altcoins that kind of been doing good, even though we've been in a bear market. More importantly, this is a real yield protocol. So they share revenue with the users, and that's what we're kind of going to get into with this strategy here. So here we are on the Earn tab on GMX. You have GLP and you have GM Pool. So GLP is basically you can buy GLP, and by buying it, you're actually buying like 50% stable coins between USDC and Tether. Then the rest is depending on what chain you're on. If you're on Arbitrum, it's mostly Ethereum, and then it's like a little bit Uniswap and Chainlink. They also have GMX on Avalanche, and it's the same makeup within the basket, but instead of so much ETH, it's more AVAX because it's on the AVAX chain. And when you buy GLP, you're automatically providing liquidity for leveraged traders to take on that up to 50x leverage like we talked about. And when they lose, that's how you get paid. So you're acting as the house, and that's like the real yield. GMX is like an exchange. They issue liquidity through users who deposit like you and I. And when leverage traders lose and they get liquidated, the fees goes to us, the house. And when they win, we actually lose money. But the cool thing is, since the beginning of time, leverage traders have a higher percentage of losing than winning. And that's why this can be a good strategy. So with GLP, the yield's 5.3% APR right now. No, that's not too cool. And also, when you're buying GLP, it's almost like an index for leverage traders. What I'm more focused on right now are these GM pools. So instead of doing GLP and then you getting a piece of all the little trading revenue, like what if leverage traders win on one and lose on the other one? Your rewards could get balanced out. But if you make a concentrated bet and you buy a GM token for Bitcoin USDC, now you're only focused on that pair. It doesn't matter what the other pairs do. So before we get into these, let's kind of talk about what GM pools are. So basically GM pools is if you buy a GM pool for Bitcoin USDC, you're providing liquidity for people leverage trading on Bitcoin USDC. Let's kind of go over the docs, talk about the token pricing so you know all the risk and all the information. So it says here the price of GM token depends on the price of the long short tokens and the net profit and loss of the trader's open positions. Fees from leverage trading and swaps will automatically increase the price of GM tokens. So that sounds like you have some price exposure. That's one thing to keep in mind. And it also sounds like you have impermanent loss exposure, but they don't say that here, so I'm not sure. And it says here GM pools aim to maintain an equal worth of long and short tokens. So when the price of a long token increases, there may be a positive price impact to incentivize selling of long tokens for short tokens to rebalance the pool. While this balancing is incentivized by the pool, it is still possible for pools to not be balanced at times. If a pool keeps its balance, its pricing, excluding the profit and loss, should mimic a pool that is 50% long token and 50% short token, and that rebalances as price changes. Now let's go over the risk. There's always risk no matter what you're doing. So obviously there's smart contract risk that can get hacked. Good thing is they have a lot of audits, and they've been existing for a long time with lots of money. So I don't feel uncomfortable putting money on GMX. However, I always say invest what you're willing to lose. And then you have counterparty risk. The GM pool is the counterparty to the traders. If traders make a profit, that comes from the value of the GM pool, like we just said. If they lose, that's how we make money. And then you have token risk. So bridge token may depend on the security of the bridge. Peg tokens have risk of depegging. Okay, so back to these GM pools. So you see all these yields here. You can get 22% APR, and it has a base APR, and then it has a bonus APR. So the base APR is the price of your GM tokens is increasing, right? So when you sell whatever you sell it for, you get more of that. Like it adds on to your fees, so you get more a higher GM token balance. And then the bonus APR on Arbitrum is Arbitrum tokens, and the bonus APR on Avalanche is Avalanche tokens. So you have 22% Bitcoin, 20% on ETH, 62% on Solana. You got 28% on Arbitrum, 47% on Chainlink, 8.2% on stablecoins. That's not bad. 8.4% on Tether, not bad. 49% on Uniswap, and then you got 51% on XRP and 49% on Litecoin. So which one of these makes sense for right now, and why? So if you think Solana, for example, like obviously 22% on Bitcoin is great, 20% on ETH is great, but you can get that, via concentrated liquidity on Uniswap v3 with a little bit less risk. Because when Bitcoin drops, while people will get liquidated because people are long in Bitcoin, people think that the bull market is back. As we're going to talk about here soon, that may not be the case. So you want to look for a token, like doing this strategy, you want to look for a token that may not drop as much, but is also paying a high yield now. Or you can risk it on something like Solana and get 62%. But if the price drops hella, is that yield going to be worth it? So let's look at some Solana metrics. Solana is up 164% from the lows. Their previous level of support that would be like a 27% drop, depending on how much leverage is in there, would depend on the passive income you would make, obviously. But I definitely think Solana is going to drop some. Why do I think that? If you go to DeFi Llama, you look at the TVL, it's just been flatlining. And yeah, it's starting to rise a little bit. But if you look at the stablecoin, which is what this green line represents, stablecoins aren't picking up. And stablecoin liquidity is important for a chain because throughout this bear market, people have been holding stablecoins because, they're risk off. And then once they start to deposit their stablecoin onto a chain, then they use those stablecoins to buy either altcoins or start farming or whatever the case may be. We're not seeing that trend pick up, so the fundamentals are kind of lacking in Solana. And that's a big reason why I think we're going to have a drop, along with just the overall economic climate that we're going to talk about here in a bit. So it might even be a better opportunity to short Solana if you want to take on that risk. But shorting is a lot riskier because you can end up owing money. Let's look at Arbitrum. So I think this could be a good strategy. 28% on Arbitrum is good because if you look at the Arbitrum chart, I don't think Arbitrum's going to drop too low from this. Arbitrum, I'm really bullish on Arbitrum, way more than Solana if I'm just keeping it a buck with y'all. I think we've seen possibly the bottom for Arbitrum. I don't think we're going to go all the way down here. We may go to like right here, but I think the drop in Solana will be way more just because the pump was higher. Chainlink. Now, the yield on Chainlink is 47%, but like I said, this might be a better Uniswap v3 position because I think Chainlink's going to drop. Now, while the Chainlink fundamentals are super, super strong, like some of the strongest in crypto, and I made an in-depth video on all the fundamentals of Chainlink, a yield farming strategy you can do on Uniswap v3 and everything. Feel free to watch that. But if we look at this Chainlink chart, we see we were in this channel for a long time. We broke $10, and now we're being met with resistance here. We're retesting this as resistance. So, and you see the volume, right? Volume is red. So I think we're probably going to come back down, maybe here, maybe even back here, and test this as support before we go and break this next level. And I'm not going to go through all these. Let's go through this last one. Uniswap, I think this will be a good strategy to buy a GM token for. You got the base APR 35, bonus APR 13. The reason why is because similar to Arbitrum. If we look on the Uniswap chart, obviously Uniswap has strong fundamentals. It's not really a strong incentive to hold the token. It's like a pet rock token. It's a governance token. They hold a large treasury of it. They could sell at any time. But you see it hasn't pumped too much, and it's still treating this 62 EMA as resistance. It did just get on top of the 200-day, but if the market corrects, this wouldn't correct too much, but a few percentage points. So if it corrects a few percentage points, but you can get a high yield, I think that's worth the risk. This is another reason why I'm bullish on arbitrum. I should have went over this right after, but and that, unlike Solana, the TVL has been increasing lately. It's not at all-time high levels yet, but it's been increasing, and also people are deploying stablecoins on the network. You see a similar trend with Ethereum, similar, not the same. Stablecoins are kind of flatlining. They look like they just started going up, but you can see that TVL starting to spike up, so only time will tell. And just so you know, when you want to buy these, you connect your wallet. Again, like I said, you can look on Arbitrum, but you can also look on Avalanche. And then, there's different yields here. So the Solana yield on Avalanche is way lower than on Arbitrum. So you want to make sure you're looking on both chains so you can maximize your profits. 58% on AVAX USD, that's not too bad. So if you want to buy it, you go here and you can buy with either AVAX or USDC. And then you get your GM tokens. And like I said, if leverage traders are losing, then you're making money. If not, you're losing money. Simple as that. Okay, so now that we went over the GMX strategy, why does this make sense right now? Am I expecting a downturn? The answer is yes. Why? Well, I do think we are in the beginning stages, or I do think we could be in the beginning stages of a bull market, but I don't think we're there. I don't think we're out of the woods just yet. The reason why is because interest rates are still really, really high, right? And people say, oh, they're going to drop yields here pretty soon. But history shows that once you drop interest rates, we always see the bottom after interest rates drop. Now, hey, it's possible that crypto could be immune to it. We haven't seen crypto in this kind of environment. Like since the beginning of crypto, we've been in a low interest rate environment, right? It would seem like if you lower interest rates, the party's back on, corporations are going to start borrowing money again, and people are going to start borrowing money again for cheap. The money's going to find its way into asset classes, and the party's back on. That will happen eventually, but not initially. And the reason why is because the only reason why the Federal Reserve would even lower interest rates is if it's a last resort and something is breaking. Like they're still printing money, as we're going to go through here and show you, but if they lower interest rates, that's going to signal something in the economy is broken. Smart money is going to look at that and take a risk-off approach because they know the market's going to drop. It happens every single time in history, and then the market starts to go up. So before I get into the next point and kind of just like drive that point home, let's look at some charts here. Now, this is the United States Central Bank balance sheet. This has been going down. The Federal Reserve is offloading junk bonds. That is good. And we finally see across the 200-day moving average is finally on top of the actual line. But if you look at the M2 money supply, it's still consolidating. So that shows that money isn't coming out of the system as much. Like they're offloading bonds from their balance sheet and assets from their balance sheet, but money is still being printed in random little places, and that shows here. Also, you look at the S&P, we have this high interest rate environment, all these things, and we're near all-time high levels. It's a lot of fluff in the market still that has to be flushed out. So I think once rates get lowered, or I'm not going to say I know, I have a strong feeling that once rates lower or sooner, no one knows, but I know for sure if they lower rates and that signals something's broken in the economy, this is going to correct itself. And we're probably going to go, down to this trend line and maybe even break it and go even lower. That's the same thing for the Dow. Like we're literally at all-time high levels with high interest rates. I think we're going to have a recession here in Q1, maybe Q2 latest. And a lot of, analysts and smart money and institutional investors are taking that same approach and have that same idea. On a positive note, though, if you look at stablecoin liquidity, you see it's dropping, right? Or market cap dominance for Tether, which is stablecoin liquidity, is dropping. That's signaling that people are selling their stablecoins for Bitcoin and altcoins. You see that with Tether, and you also see that with USDC. So that is a good sign. So I think that we're going to have one last drop, and then we're going to start making our way into the bull market. If the Bitcoin ETF gets approved, that could be a huge narrative. You got real world assets, that's a huge narrative. And then you also have the Bitcoin halving, which is, I don't know how huge a narrative it's going to be. Obviously, it's not going to have as big an impact from a supply and demand standpoint, but from a narrative standpoint, I still think it's going to have an effect, but just not as much. Let's go into this last thing and why I think that we're going to be going into a recession here / seeing a correction here very, very soon. So I'm just following the smart money here. So Jamie Dimon, CEO of JP Morgan, is selling 1 million shares of JP Morgan stock, right? Now, I forget, he's been the CEO for like 18 years. This is his first time selling stock, right? And he's saying he's doing it for tax purposes, and people are thinking, oh, he could be contemplating retirement. Like, no. He sees that the ship is leaking and he's trying to get out. Like, don't be their exit liquidity. If you have some stocks, it would not, again, this is not financial advice, but it wouldn't be a bad idea to sell into this strength. He's selling $140 million worth of stock, guys. That's not a small amount of money. And he's not the only one. Mark Zuckerberg sells his first Meta shares in 2 years after the 172% surge. These founders and CEOs believe in their company. So the only reason why they would be selling their stock, in my opinion, is if they think that the market has lower to go. If not, they would want to hold it as it keeps going up. He sold $185 million worth of stock in November. That's not a small number. Lastly, Jeff Bezos just sold $240 million worth of Amazon stock, and he's planning to sell more. Now, they'll try to come up with some excuse and be like, oh, I'm selling because of this. Like Jeff Bezos said, he sells this much, he sells stock every year to like fund Blue Origin. But again, if he thought the stock was going to go up, he will hold it for a little while longer, and then he'll be able to have even more money from Blue Origin because he will be able to borrow against that stock. That's another thing. When you have millions or billions of dollars in stock, you can borrow against that money and you don't pay taxes on borrowed gains. So it's actually a higher incentive for them to borrow against the stock versus sell it and have to pay capital gains. But they're selling it because they expect more downside. I'm telling you guys. So again, don't be their exit liquidity. Trade smart. That pretty much wraps up the video. If you got value from this, I ask that you drop a like, consider subscribing to this channel and to Know It Owls, where we do deep dives, market updates, like all kinds of things. Go visit the channel and check us out. Also, we are launching our beta education and coaching platform. So if you want to generate passive income like I showed you here, and you want to have coaches and you want to go through the best course in the world that shows you how to yield farm, click the link in the description, the Calendly link. You're going to book a free 30-minute strategy session with me. I'm going to ask you a few questions, get an idea as to where you are on your investment journey, where you're trying to go, your goals, your expectations, and see if we can meet you there. At the very least, you'll learn some things, make a good connection, and I'm sure if this isn't a good fit for you, we can point you in the right direction. So with that, I thank you for tuning in, and I'll see you in the next video. Take care.